So this problem was asked in the year 2016 and September, and this is an ACCA problem here. So it is a lengthier problem. So we'll start from the required first, then we'll move on to the question. The required is assuming that CSC Co keeps to its agreement with Encompass Health, calculate the shortage of beta, the resulting optimum production plan, and the total profit for the next month. Okay. So the company seems to be having some kind of a raw material, and we have to find out what would be the shortage of this beta. I think this should be the limiting factor in this problem, and what should be the production plan as well as the total profit for the next month. So 1 month later, the supply of beta is still limited, and CSC Co is considering whether it should breach its contract with Encompass Health so that it can optimize its profit. So they're asking whether it could be breached, so some kind of an agreement, and whether that agreement could be breached. And the last question is required. Discuss whether CSC Co should breach the agreement with Encompass Health. Okay, so that's about 4 marks. So we'll start from this problem. So first we have to calculate the shortage of this raw material beta. Then we have to create the optimum production plan, and then we have to find out the total profit, and then we have to move to the section B part of the question. So we'll start here. So this is going to be requirement A. So requirement B, we could put it here. So we'll read the question. You can just read it along the cursor. So if you see here, they have given that Singa, the raw material here, it's 1.2 per gram, and this company has an amount of 0.3. So this is an amount because it's given in dollars here. So 0.3. So we have to we should know how much of grams this product is using. Okay, that's why he has given the per gram amount, also the raw material consumed by each of the products, cake, cookies, and shakes. The same applies to this raw material also. So he has worked out the contribution, so we don't need to work it out. So this is the maximum demand that the company can have, and this is the total fixed cost for the month for the product. So the total availability of beta is going to be 12,000 grams for the next month. And this company has also signed a deal with Encompass Health, okay, to sell 5,000 shakes each month at a lower price of 5.8. Why it is lower prices? Because the current price is 6, and here they have put it as 5.8. Okay, so this 5,000 shakes is not included here. Okay, so the total demand for the shakes is 2,500 plus this 5,000. Okay, so that's about the problem here. So first we'll try to find out the shortage for beta. So first we have to find out the total requirements in grams we have to find. So before that, we have to find out grams used per unit. Okay, how many grams we are using per unit. So for that we have to have one more or one or two more lines. Okay, cost of beta per unit. So per unit we would be consuming 0.3. Is it right? No, it's 0.75. 75, then 0.3, then 1.5. So the value per beta, okay, so cost per gram of beta is going to be 1.5. So it's going to be the same across all. So the total requirements in grams, okay, that to find out we can put like this. See, totally 0.75 has been used, and each gram is 1.5. So how many grams we are using? We are using 0.5 grams, 0.2 grams, and 1 gram. Okay, for the last one we are using 1 gram. So the grams used per unit would be this one. And let's find out what's the total grams required. Expected demand, we have to find out the total grams required. Expected demand is 11,200 units, 9,800 units, and 2,500 units. Okay, so 2,500 actually it will work as plus that 5,000 additional order. So both put together it will be 7,500 grams required. So what's the total grams required product wise? This is the demand for the product multiplied by the grams per unit. So we got total grams required, okay, product wise. So what's the grand total of all these grams? We'll sum it. So we got this. What's the availability of the grams? The available grams is only 12,000. So only 12,000 grams are available. We need a lot of grams extra. So the shortage, see, the question wanted us to find out the shortage. So this is the shortage, okay, whether it's shortage or surplus. It is shortage of beta. So we have done till that. We'll move on to the next part of the question. So the next part of the question was the resulting optimum production plan. Okay, he wants us to find out the optimum production plan. To find out optimum production plan, first we need to find out the contribution per gram, okay, or beta gram. So the contribution per unit has they given, yes, they have given 2.6. Just check whether it is all variable cost. Yes, variable, 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 and variable. So the calculation they have done is correct. Don't always assume that the number they have given is correct. Sometimes what they would give is they would have added some fixed cost and they would given profit also. Okay, so be very sure that the number they have given is contribution. So we have got our contribution per unit. So we have to get grams used per unit. So this is the number. This is the number. So we'll get the answer now. So contribution per beta gram would be this number. Okay, these numbers. So when we rank them, This will be number 1, this will be number 2, and this will be number 3. So we can have the production plan as per what we did in earlier problems. Okay, that we'll copy and we'll do it here. So this is maximum demand. Maximum demand. Then hours required. We can say hours required. We can say grams required. Grams available, and units to be produced. Okay, so we'll start from the given elements. So the first one is cookies, the second one is cakes, and the third one is shakes. So in the starting, how much grams is available? 12,000 grams is available, and required we'll put, okay, grams required we'll put. We'll also take maximum demand. So maximum demand is for cookies, okay, for cookies it's going to be 9,800. For cakes it's going to be 11,200, and for shakes it is 7,500. So let's work it out. So grams required, how many grams would be required? See, for 9,800 units of cookies, we require how many grams? We require 0.5 grams. 0.5 grams. Okay, this much of grams is required. So if we have this much of grams? Yes, it's available. Then means we can produce all of those units. All those units we can produce. So we can produce 9,800 units that can be easily produced. The next one is with 7,100 grams, can we sell all of the cakes? Okay, so yes, we can produce all the cakes, not all the cakes. Okay, for 7,100 grams we can produce. That means availability becomes 0. Okay, grams required is 11,200, but we can't produce for the full 11,200 grams. So let's see how much grams are required. 11,200 into the grams required for cakes. Okay, I think we did something wrong here. One second. The grams required for cookies is only 0.2. Okay, it's 0.2, sorry. So 1960 is required. 1960 is required. So with that we can produce all the units. For cakes we have 0.5 grams have to be used for per cake. So totally 5,600 grams is required. Do we have so much grams? The answer is again yes, because 10,040 grams were available and we require only 5,600 grams. So how many grams would be balance? So 4440 grams is available, but of course we could have produced all this cakes. Okay, so producing cake is not a problem, we can easily do it. And in terms of shakes, each shake requires 1 gram. So 1 gram means the total of this 7500 grams is required, but we don't have that much of grams. Okay, so we have only 4440 minus 4440. It can maximum come to 0. We can fully use it, but how many products we could produce? See, each product takes, okay, each product takes only 1 gram. So we could produce, okay, this much of units we could produce. Okay, the unproduced is around, see, the external demand we can meet, because 2500 shakes we can easily meet that external demand, but we cannot supply that other company. Okay, we cannot supply the other company, so that will become the problem here. Okay, so but let's see what he says. Assuming that CSE Co keeps to its agreement with Encompass Health, calculate the shortage of beta. Okay, so they should be given the first priority, and first we have to sell it to them. So before selling cookies, cakes and shakes, the first thing that we have to sell is to sell these products. Okay, to sell these products first to Encompass. We have to sell the shakes to the Encompass company. That is what we should have first done. Okay, so this will be 2500. The grams required is also 2500. Here the total Encompass products that we have to sell is 5000 shakes, and each shake will take 5000 grams. So we have to start from there only. We can't do all these. Then why did we do? We just had to show that without the order, compulsory order, what we have done earlier is correct, but with the order we have to do it differently. So 12,000 kg is required and 5,000 is going to be consumed. The balance will be 7,000 kg. So how many we have produced? We can easily produce 5,000. Thereafter next we have 7,000 kg. From that 1960 kg of grams of beta is to be used. So if you use that, the balance of grams would be only 5040, but we could easily produce 9800 of cookies. So next we require 5600 grams of beta, but we only have 5040. So what happens here? We can't produce that much. Okay, so we can say that 5040 minus 5040, that means all grams can be used. Okay, so how much we can produce? The total grams we have is 5040, and each cake will take how much? Each cake will take 0.5 grams. It will take 0.5 grams. So 0.5 grams it will take. So how many products could we produce? We could easily produce 10,080 products. We can't produce 11,200. We can produce 10,080. Okay, and last is we can't produce any more shakes thereafter. Okay, so this is our production plan. So we have seen both without the order and with the order including. So without the order I have deleted. With the order I have just shown you now. Okay, so our next thing is the resulting optimum production plan that we have done and the total profit for the next month. So how do we find out the total profit? So that is another interesting question. First we have to find out how many units we could produce. So the units to be produced is cake. We can produce, can we produce cakes? Yes, we can produce 10,000 80 cakes. Cookies, we can produce 9,800 cookies. Shakes, we can produce only 5,000, right? We can produce only 5,000. The contribution per unit is, we can copy it from the from here. Cakes, cookies and shakes, we can copy it. But if you see here, the rate is not going to be the same for that order. Okay, this shakes is for the encompass order. Okay, encompass order price is not this. The price is 6 is not there. Okay, it will be 5.8. so there is a reduction of 20 cents. Okay, 0.2 is reduced, so the contribution will not be 1.2, it will be 1.2 minus 2. Okay, so it will be 1.2 minus 0.2, so the answer will be only 1. Okay, so the answer will be 1. Now contribution per unit we got. Let's get the total contribution. So this is the total contribution, and let's get the total. Okay, we'll get the total. So the total will be total is this. And what is our fixed cost? Our fixed cost is 3,000. Okay, per month it is 3,000. So our profit will be 45,358. So that's about this problem. We'll move on to the next one. Sorry, we still have a little bit element. Okay, the last element is discuss whether CSC Co should breach the agreement with Encompass Health. Okay, we don't need to do any calculation, but we have to give a explanation. Okay, so can we cancel it? Okay, if we cancel it, is there any penalty or anything? Okay, so requirement B, we just have to argue. So we can put like this. Okay, the company will lose its goodwill if it does not meet the supply order. Okay, so that's the first point. So the company will lose its goodwill. That is not such a good thing. And so rather than we don't need to calculate anything. Okay, we don't need to calculate anything. But see, maximum, the only difference is that is a 20 is the $0.2. Okay, the $0.2 is the only difference here. But we can't say like that, because if we don't produce this product, we will produce the most profitable product, which is the cookie. Okay, we would have produced cookie, cakes, okay, and little bit of shakes we would have produced. So okay, we can also put like this: if the profitability of ignoring the order and selling as per high contribution per limiting factor is higher than the penalty amount, then cancelling the order will be good. Okay, so the logic is, if the profitability of ignoring the order seems to be high, then we can just ignore the order and we can even pay the penalty, provided the penalty amount is lower and the profitability seems to be higher. Okay, in that case we can ignore the order. Okay, so we got 2 points. We have to get 2 more points, because for every 1 mark we have to write a point. We have to give a good point. So anything else? Discuss whether CSE Co should breach the agreement with Encompass. Okay, supplier will find alternative, sorry, we can put customer will find alternative supplier if we are not fulfilling the order. Okay, so they might find out a new supplier. Okay, the customer will find new supplier if we are not like able to keep up our word. Okay, and I think mostly these are the points. I couldn't generate any other point apart from this. So hope you guys got a good idea about this problem.